Hey, what's up, guys? John here. Treasury Secretary Janet Yellen expects a gradual decline in the dollar's share of global reserves, but the greenback remains dominant. Now, remember 2 years ago, she came out and said that inflation would be transitory, but in fact, it's the complete opposite. We're being walked into this. Now, on this channel, I talk about personal finance, real estate, business, and money, and essentially remove emotion from finance so we can see things clearly. I believe what we're actually seeing here is the end of the US dollar, and I believe that what we're going to start to see is record high inflation, higher taxes, and a much harder life for everyday Americans. And this is all based on facts. Now, look at this. This came out global financial and monetary system, right, in the next 6.5 years. May 2018, this is where they see things going. Scroll past, look, Bank of Finland. You start to look at some of these names and look at their positions. They're extremely powerful people. These aren't just, fly-by-night type of people thrown in this position. The US dollar loses its preeminence. Today's centralized global monetary and financial system, featuring a dominant US dollar, mutates into a world with multiple reserve currencies and financial powers of influence, mirroring the shift from the British pound to the US dollar as the reserve asset. As economic importance traditionally leads to financial monetary preeminence, the euro and renminbi are likely to gain importance alongside the US dollar and increasingly meet the world's demand for the reserve currencies and safe assets, right? So they know that we are going to start to see a gradual decline. Now, when they say reserve currencies, financial powers, and we are going to mutate into a world of reserve currencies, kind of sounds like the BRICS nations, right? Brazil, Russia, China, India, South Africa, and about 24 other nations are moving in this direction. You're seeing so many oil trades and these large transactions happening from government to government and in other currencies. And this is only just going to be the beginning, especially as the U.S. moves forward and imposes further sanctions on other countries. And if you think I'm joking, right now, Yellen calls for focus on USChina Cooperation. Treasury Secretary Janet Yellen said, it is the United States' best interest to maintain ties with China through, she said, the documented allegations on human rights abuses in China and questionable trade policies need to be addressed. Now, we're imposing further sanctions saying, we have another reason for doing it. Oh, it's for human rights abuses. It's for this, for that reason. As if, we're basically this, global authority able to dictate orders on how people need to behave, how countries need to act, and, what they have to become for them to be able to use our dollar, right? That's essentially what's happening. But many people would say, have a political opinion on it. This is much bigger than a political opinion, whether you're, this side or that side or whatever you believe. It's bigger than that. While we surely have concerns that need to be addressed, decoupling would be a big mistake. Yellen said her testimony before the House Financial Services Committee on Tuesday, Americans benefit greatly from buying goods that are cheaper to produce in China. She added, China equally benefits from the U.S. exports that are also foster the U.S. economy. That's why she stressed it would be disastrous to cease trading with China. De-risk, yes. Decoupling, absolutely not, Yellen said, echoing the joint statement leaders from the group of G7 made last month's summit in Japan. And today's video is sponsored by GreatCreditFast.com, GreatCreditFast.com. If you want to fix your credit, because I believe we're going to be stepping into a much harder world, we would love to help position you and fix your credit at GreatCreditFast.com. Go there, schedule a free consultation. You have nothing to lose and see what you have to gain by fixing your credit. So these sanctions, U.S. sanctions, Chinese hypersonic weapon makers, right? U.S. sanctions on Iran have no legal basis, China. So we're going to continue pushing in this direction. But did you see this video with Janet Yellen yesterday? Look at this.
A tabletop exercise, and in response to sanctions against a Chinese scenario where there will be an invasion of Taiwan, the scenario was that China, the second largest foreign creditor of U.S. treasuries, would dump that $859 billion in treasury securities. How are you working with our allies internationally and also the Federal Reserve to deal with a situation where China would dump that volume of treasury securities overnight?
So we are not engaging in specific exercises to address such a risk, but the United States, the National Security Council, is certainly concerned on an ongoing basis.
Well, Madam Secretary, I would encourage Treasury to make preparations and be on the ready for that scenario and work.
Now, how would you not go through exercises? How would you not be prepared and just move into some of these measures, some of these sanctions with absolutely no thought and repercussions on what this would mean for over 330 million Americans? It's absolutely ridiculous, right? You would have to be a complete fool to move in that direction without weighing the downside risk. Just in, Egypt to settle trade with China, Russia, and India and local currencies ditching the US dollar. Just in, Pakistan pays its first government-to-government import of Russian oil in Chinese yuan, ditching the US dollar. Now, we've seen many of these articles with different countries moving forward and pushing in this direction of getting rid of the US dollar in their local economies. The new chief of BRICS, the new development bank, Brazil leftist ex-president, revealed they are gradually moving away from the dollar and promised at least 30% of loans in local currencies. Now, why they're doing this is they want to use their own currencies to uplift their own economies. But as they do that, the US dollar is going to become less and less and less important. And so what are they going to start likely doing? They're going to start to, make the world a little bit more challenging for us to fund our governments. It's going to be much more challenging. And many people would say that's a good thing. But what people don't realize is that when you look at the US economy, I think it was 21 or 22% of the entire US population is getting welfare or government assistance. Right? You start to look at what's going on right now with this job market going through this change. You start to look at the cost of living. You're going to start to see so many people that are going to need government assistance. And if we're stepping into an inflationary period where people aren't buying and supporting our country and buying our debt, what is this ultimately going to do? They're going to have to increase taxes more and more and more and more. The world's just going to get a hell of a lot harder. And as they continue doing that, there's going to be more layoffs. There's going to be more problems and more pain in this country. And you're going to start seeing large corporations start to lean into AI, tech, robotics, start to outsource talent in other countries, start to open up offices in other countries. They're going to start doing this. And America, being once the land of the free, is going to just be a very, very challenging place to live, right? This isn't going to happen overnight, but if you follow the patterns, you look at the trends, that is what is very likely going to happen. For example, for the U.S., it would likely mean less access to capital, higher borrowing costs, lower stock market valuations. Among other things, having the world's reserve currency has allowed the U.S. to run large deficits in terms of both international and government spending. Now, if we look at how this would actually impact us, governments, they wouldn't want other governments wouldn't want our U.S. dollars. Governments would lose the ability to borrow at the current levels, meaning interest rates would rise, meaning credit card bills would get a hell of a lot more expensive to service that existing debt, because that credit card debt is at an adjustable rate. Every time they hike interest rates, the cost to pay down that credit card gets harder. It gets more expensive. And so if our interest rates are going to continue to rise, you might borrow $2,000 or $3,000, and then at the end of that loan payment, you might pay back 3 or 4 times the amount you borrow. But if the world is getting a lot more expensive, and then the cost to service the debt's getting more expensive, we're going to have more and more defaults, meaning banks are going to start writing off more and more losses, and they're going to get even more conservative. So it's going to trickle down into real estate, it's going to trickle down into consumer lending, it's going to trickle down into everything. This is almost like without doubt. You look at the dollar. I mean, look at the dollar just in the last, basically the last 14 months. I mean, we're headed in a direction that doesn't look good. Point blank, it doesn't look good. I mean, the euro is looking a lot better than the U.S. dollar, but a lot of countries are looking better than the U.S. dollar right now. We just don't talk about it. They'll only talk about things like, oh, look at Turkey, or look at Argentina, or look at some of these other inflationary countries. Sure, they have their problems, but the U.S., they're not the reserve currency, right? When we have our problems, we're really going to have our problems. And a traditional global reserve currency lasts about 100 years, and as of now, we're 75 years in to the U.S. dollar being the reserve currency. 1944, 75 years in. So what do I think? I think that what we're going to start to see here is we're probably going to see the U.S. government continue to push further sanctions. We're going to see gradually more and more and more countries join BRICS, and we're going to start to see, a huge erosion of our lifestyle. Many people would say, John, that's impossible. It's not going to happen, because they're used to how America was. But if you look at what's going on everywhere, you look at the agenda that's going on right now, you look at what's happening with America, you can't say At least for me. You can't say that we're heading in a direction that is better today than it was 5 years ago. You just simply can't say it. But if you look at these other countries, you'll start to see that these other countries are headed in a better direction, many of these other countries. I mean, you look at the future of India, look at the future of China, look at the future of Mexico. Their futures are probably going to be much brighter than America's future. Because why? Right? Look at the dollar. The dollar was once the reserve currency based on our military and based on the fact of us producing fossil fuels. We're moving in a direction of producing less fossil fuels. Our military, they're having a harder and harder time recruiting for obvious reasons, and our military is not going to be able to compete with a basket of other countries that are in alliance. That's just no way, right? So what are we going to see here? We're going to see a problem for America. We're going to see an issue for the US dollar. And I think we're going to see a very, very big transfer of wealth from large corporations and from very wealthy people that are going to seize all the opportunity that's going to come from inflation. Because what do people do when taxes increase, when we start to see the dollar kind of pull back, and we start to see a affordability crisis? They move in and they acquire assets because people can't get access to capital. The general public has a harder time getting access to capital. They're sitting on tons of it. They're able to go out there and buy, and turn everything into a renter nation. I mean, this is what the facts say. But I'm curious, what do you say? Drop below, hit the like button, subscribe here, and on my second channel. And add me on Instagram for other content you're not going to get here, that's for sure. And also, if you want to fix your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. Catch you guys in the next video.